one man, many talents, or one man and many ventures. That's the phrase that comes to my mind when I introduce my next guest, which is Mr. Rishabh Mariwala. Thank you so much for joining us today.
Thank you. Thank you for having me. I'm happy to be here today. It's our first Sharp Summit. It's a first of many to come. We are an investment firm that's been around for the last 8 years, and we've been investing in uh, cutting edge, gritty entrepreneurs and have delivered top docile returns in the consumer space specifically. And some of our investments have included early stage investments in Nykaa, in Mamaearth, and we've got a few businesses that are more later stage like Healthcart and Bira. And we're very passionate about consumers and the consumer space in general.
Sure. You described it's been an 8 year long journey, and you named your favorite bets. I'm guessing. Are there any sections that you take particular interest in apart from consumer, or are there any sections that you try to stay away from?
Yeah, definitely. I think we've learned through the years. We've been around for 8 years, and I think initially we said we'll be let's dip our toes, let's try different things out, and we've come to realize that we're good at consumer. And I've been a consumer entrepreneur myself. I had my own beauty personal care brand, and which I sold in 2020. So I've understood some of the travails of the beauty personal care business, and I understand the importance of branding, of distribution, of building the right product, and through that we've been able to identify quality bets specifically in the beauty personal care space, and that's why around um, a big part of our portfolio of 23 companies, around 40% of them would be in the beauty personal care space. But again, so we won't look at areas such as deep technology, AI, anything to do with clinical trials. We're very specific. Actually, we're stage and sector specific. As a stage, we're at early stage venture, and as a sector, I think it's more to do with consumer tech, and sustainability and health tech. So those are the 3 or 4 sectors that we want to really focus on.
One would describe that these are also very evergreen sectors. Consumer is something that never goes out of style. People never stop shopping, especially with beauty and skincare and wellness. It's only going to go upwards and upwards. Describing again your journey, reflecting on your 8 years and your experience, and are there any lessons that you brought in from your previous entrepreneurial journeys and also from your family business?
Oh, for sure. I don't think I'd be sitting here and investing in businesses if I didn't have the operational experience of a good 10 years that I had operational experience with my consumer brands. And what I built was quite bootstrapped. And I understood the difficulty and the struggles that the entrepreneur faces. Because I faced it myself. And so I can relate and I can connect to those entrepreneurs. So I think overall, from a learning perspective, I think building the right team with the right competencies. I think even getting a product market fit right in the initial years without burning too much capital. Um, I think frugality is important, and not burning too much money. Um, and I think overall, as investors, it's more empathizing and being able to appreciate where the entrepreneur's coming. It's his or her blood, sweat, and tears, and what we can do is support the entrepreneur in that journey, and I think uh, help them along the way through value adding to them, and not just value adding to them, but I think opening doors, opening networks for them, critiquing their strategy, and being supportive when they need to be supported. And at the end of the day, we are a late we're long term patient capital, so we want to be with them through that journey, as they go from an early stage to mid stage to late stage. Our ideal would be to be with them throughout that. And we know how long it takes to build brands. It's not it, Brands don't get built overnight. It takes 8 to 10 years to build a brand and to be sustainable. And I think if we are able to do that with most of our companies, and they're able to sustain themselves, maybe to IPO or maybe to an M&A, I think we'd be very happy.
Um, what we're going through right now within the startup ecosystem of India, it's being described as a long funding winter. How much would you agree with that? And also, when you get prospects for funding, what is it that you look for categorically?
Yeah, so in terms of the funding winter, I mean, there's truth to that. I mean, at the end of the day, there's at later stages it is more difficult to raise capital. But I think in terms of when you're actually evaluating a business, the challenge is to back entrepreneurs who are frugal. That's why I spoke about frugality, and who don't want to burn capital. And I think that's one criteria. Of course, anything can happen, and it is venture, and venture is high risk, so there's no question about it in terms of if the businesses go south. But overall, in terms of a criteria, you want to back entrepreneurs who understand unit economics, who understand path to profitability, who understand what why your marketing or your cost should be under control. And that's what we'd want to look for before investing in them.
So you're looking at conservative entrepreneurs who know the value of the money and would not go out burning. How much of the focus is on profitability?
I think conservative is the wrong word. I won't say conservative. I would say the frugal, but more in terms of growing, but not growing at any cost. So it's okay but it's okay if you're not profitable initially. This is early stage, so we can't expect them to be profitable. I think profitability will come over time, and this is a long game. As long as they are aware of the levers of growth, and they're aware of what it takes to be profitable upfront, and overnight they can change the structure of the PNL. I think that's something that we'd look for in terms of the depth of understanding of the brand, the growth, and the PNL.
So to get your money, one has to understand the value of the money and not grow at all costs, but at reasonable costs.
I think that's fair. Yeah, I think that's fair.
Um, Lastly, I'd like to ask, are there any lessons that you take from your living room to your boardroom, something that your father passed it on to you?
Yeah, I think I mean, a lot of things, frankly. And it could be as simple and basic as just being disciplined, being particular, being punctual, um, being having humility. I think all these things go a long way. Being professional. I think we're lucky. I'm lucky to have. It's both a responsibility and a privilege to be part of what my father's built. But at the same time, if I've imbibed these values, I think that can help take the legacy further, and can build upon that. And there's a lot of goodwill. He's built a lot of goodwill in the market, and I'm grateful for that.
Okay, my final question is: you've seen your family business flourish, and now you help these startups take off. What are the parallels that you draw, or what are the differences that you spot between a legacy company and the upcoming startups?
What are the parallels?
And differences.
I think again, there's no one size fits all. Everything is not the same. You can't paint a wall with the same color, and the brush has to be different. I think I think in terms of the parallels, I would say that the entrepreneurs who really want to go out there and prove themselves, and that grit. I think that grit is critical, and just having that ability to weather the storm, because storms are going to happen, you like it or not. People are going to talk. You'll have good quarters, you'll have bad quarters. Today you're more sought after, tomorrow you're not. It's part and parcel of the journey of a business, and how you weather that through, how you respond and react to that. I mean, those are it's things like that. I think that you have to look for grit in the entrepreneur. You have to look for what's in it for the entrepreneur to make it. Why does the entrepreneur want to make it? And does the entrepreneur have a winning streak in them or not? And I think some of these things make a big difference. I think in terms of the differences, it's more to do with we are as a larger scale business. I think we have quarter on quarter pressure, and we can't. It can never be growth at all costs. You have to you have to grow at a sustainable pace, and you have to keep up that. FMCG in the country is a defensive sector, so it's very different from these new age businesses. They don't the VCs and PEs can grow at a pace which is um, 50x 20x, and these are new categories, and they're smaller businesses. Large scale businesses can't grow at such a pace, unless the category is completely nascent. But I mean, in India, I don't know any category like that. So I think it's different for early stage, it's different for late stage.
Thank you so much. It was lovely talking to you. Thank you.
If you like the video, do like, comment, share, and subscribe.